Robust consumer activity revived fears that the Federal Reserve could delay the first rate cut. In this context, safe haven assets with favor with the investors who dampened the risk on mood. Three benchmark stock indexes closed yesterday in the red. The stocks sensitive to interest rates put the most pressure on the Nasdaq. The fundamental picture remains the same today, but the high-tech sector received a boost for recovery. You are watching a review of the New York session with me, Ekaterina Stikhina. The S&P 500 fell to the lowest level in a week. The index shed 0.56% to close at 4,739 points. The stock market perked up in the New York pre-market, and the S&P regained all yesterday's losses. Futures on the S&P added 0.49%. The Nasdaq rebounded by 0.9%, and the Dow Jones remained under selling pressure, and the S&P is expected to trade in the intraday corridor between 4,738 and 4,780. A lower bearish target is seen at 4,720. A bullish target is 4,797. And yesterday, the U.S. Commerce Department reported retail sales, and the data confirmed the robust consumer activity, which accounts for almost 70% of the U.S. economy. The red-hot data showed the steady consumer demand despite high inflation and restrictive monetary policy. Strong consumption reinforced fears that the first rate cut by the Federal Reserve could be postponed from March until May. Additionally, U.S. economic activity little changed from December through early January, while companies reported mixed inflationary pressures. Nearly all pointed to signs of a cooling labor market, the Fed said in its White Book. Against this background, the market lowered expectations for a rate cut in March to 53.8 from a 63.1 on Tuesday. Benchmark 10-year Treasury yields rose to 4.1%, although the rise in yields was later partly offset. Rate-sensitive high-tech stocks came under pressure. Shares of Amazon, Nvidia, and Alphabet fell between 0.5% and 1%, whining on the S&P. Tesla lost 2% after the electric car maker cut prices on Model Y cars in Germany. A week after cutting prices on some Chinese models, large US banks also continued to suffer losses ranging from 1 to 1.8%. The market volatility index grew to more than 2 months high of 15.4 yesterday. The New York pre-market trading was much more optimistic. The benchmark indexes, excluding the Dow, were able to claw back some of their losses. S&P and Nasdaq futures saw sharp gains driven by AI and chip makers. Shares of US-listed Taiwan semiconductor manufacturing jumped by 5.5% in a pre-market trading after the world's largest semiconductor maker projected revenue growth of more than 20% in 2024 amid rising demand for chips used in artificial intelligence applications. The forecast of a 20% growth instantly lifted the entire sector, and the used chip equipment manufacturers went up before the opening bell. Nvidia, Marvell Technology, and Advanced Micro Devices added between 1.6 and 3.2%. The recovery of indexes was also helped by lower yields on the Treasury bonds. When it comes to the economic calendar, recent statistics point a mixed picture. The labor market has once again shown its attempts to risk funds. The number of initial unemployment claims declined by 16,000 to 187,000 last week. It's the lowest level since September 24, 2022. The consensus suggested the opposite dynamic, a moderate increase to 207,000. Apart from the strong labor market, the housing market also revealed an optimistic mood. The number of building permits in the United States exceeded the market forecast of 1.8 million, reaching 1.495 million in December. This number of permits was up 1.9% from a 1.467 in November. On the other hand, the Philadelphia Manufacturing Activity Index again pointed to the low expectations. The manufacturing PMI climbed by 2.2 points to minus 10.6 in January, from minus 12.8 in December. The reading is weaker than the estimated minus 7 points. It's the eighth negative reading in the last 20 months. The batch of the fresh economic data slightly cooled the market optimism. The futures on the US stock indexes moderated their growth dynamics while still remaining quite deep in the green zone. In addition to macroeconomic reports, traders today will have to evaluate comments from Atlanta Fed President Raphael Bostic, a voting member this year. As for the corporate sector, US banks and financial companies will provide more corporate reports today. Apple gained 2.6% before the opening bell after Bank of America Global Research upgraded the iPhone maker's stock from a neutral to buy. Obviously, unlike the stock market, the fresh economic data uplifted the US dollar. Both the dollar index and the treasury yields, which retreated from a highs in intraday trading, resumed their growth after the release of the reports. In the New York pre-market, the dollar index was at 103.55 or 0.10% higher. As for the intraday forecast, analysts predict fluctuations within the base range of 103.26 to 103.75. The next targets are 103.10 and 103.90. The dollar index stood at 103.69 on a Wednesday. It's the highest level since December 13. The dollar hit a new one-month high against a basket of 6 major currencies after the strong retail sales report showed U.S. economic strength, curbing hopes of a rate cut in March. On Thursday, as US Treasury yields fell, the dollar retreated from a one-month highs, but data on the housing and labor markets brought the index back into green territory. Although the reports are of secondary importance, they add to the worrying picture of a persistent inflation, which in turn pushes back the prospects for monetary easing. The Canadian dollar is hovering not far from its 5-week low. By the opening bell, the USD CAD pair was trading at 1.3516. The instrument is likely to trade in the intraday carried between 1.3490 and 1.3550. The loonie fell to a 5-week low on Wednesday as investors revised the prospect of rate cuts by the Bank of Canada. Inflation in Canada will likely pose a bigger threat than in the US due to high growth in Canadian wages and housing costs, which could force the central bank to cut interest rates after the Federal Reserve. However, domestic data showed that producer prices fell by 1.5% in December from November, the biggest decline since August 2022. As for the crypto market, popular tokens are now trading mixed without a common dynamic. Digital assets almost completely neglected the news that the European Union today reached a preliminary agreement on improving the work of national authorities in the fight against money laundering. European Union rules will be expanded to require service providers to check customers who make transactions of 1,000 euros or more and report actively. Despite stepping up pressure, the top tokens have changed a little. By the opening bell in the United States, Bitcoin was 0.4% lower at 42,450. The intraday forecast for the flagship crypto is trading in the basic corridor between 42,100 and 43,200. Going beyond these borders could drag the price down to 41,600 and 41,100, or push it up to 43,700 and $44,200. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Good luck in your trading and see you online tomorrow.